It could be, I don't know. This one I've never run across in my life. So besides growing grass too tall, we're dealing with a lot of issues. There are a lot of issues in housing. There are. I'm going to be the first to admit, I have never worked for a village that had a housing department. He had a community development department. The issues that are here in southern Cook are not prevalent up north. Up north, DuPage County, you don't have to get a transfer to stamp. You don't get house inspections because their housing stock has been maintained. Unfortunately here, because of blight, because of whatever the reasons, it has to be correct. We have to move forward to the point that people, first of all, are honest when they sell, just like the lawyer was just saying. There's a lot of times these quick claim deeds go back and forth. We don't even know who the owner is. We have no idea. Those are the things we have to step up to the plate. I agree with the trustee Henyard, who when I was being interviewed for the position, I brought up that what we're going to be putting into place now, hopefully, keeping our fingers crossed, is what I call banging the owner, banging the bank. It was done in Cincinnati about 11 years ago, where they fine the bank $500 a day that property sits vacant past a certain time frame. That's a little strong for Dolton, but we're going to put something in place. We have to hold feet to the fire to the property owners to get these places rented. I'd also like to address again, you're talking about bad tenants. That's difficult. We can't play judge and jury, and I think Trustee Hunt pointed that out and said, we can't interview the tenants. That's not right. But we can hold the landlord accountable by writing tickets against the property if there is something wrong. We can't just single it out because we don't need a lawsuit. We got enough of those. And I just have to commend the board as a whole for what they're doing. They're being very aggressive. I have been told by some of the board members and the mayor that I'm too demanding. Well, staff knows what I expect because
we right on target, right?
And also we have Mr. John Renell with the loan office.
But I did want to make one comment. Mr. Urban did say that we are becoming more aggressive. So I thought about something when the gentleman was up talking about the issuance of citations about people not keeping their grass up, garbage cans being left out on the curb, because I truly heard that all summer long. But I will say, looking back to the 2012 year to 13, this courtroom was full, and in 12 it was not. So tickets, maybe somewhere between 50 to 75 a month were being issued in 12, but in 13, we were over 200 each month. So I will say we did step up our on issuing citations for property management and upkeep. Yes, ma'am.
You call in on your neighbor if they're not keeping their grass up?
Yes, ma'am.
Okay.
I think, and I know I'm in the back, you can call it anonymously. We're not going to pit neighbor against neighbor.
No, we don't.
When they call and say, hey, why did you come over here? We're not going to say, oh, Mrs. Jones lives next door to you. We're not going to try and start riots between neighbors.
We take the address to the property and we take your complaint. We do not necessarily even ask for your name or your information. We just need the property to where the issue is and what the complaint is.
Thank you. Everyone knows that I am a strong believer that knowledge is power. But also, many may know that if you have the knowledge, it's about how you apply it. So I'm giving you the tools that you need to apply it the right way. Tool number one, insurance. A lot of us don't think that, a lot of us don't understand how valuable this really is until it's too late. You might make a claim with an insurance company that you owe money and it was not uncovered. And you will get upset because you spent all this money and you wasn't properly trained. So I give you the person with the plan, Larry Powell.
Thank you. How are you all today? I'm your breath of fresh air. I'm the break. Okay? But look, I'm glad to be able to be out here with you today. Tell me, how many of you all have opened up your insurance bill and found out that your rate just went up? And you say to yourself, I didn't have a claim. I didn't do anything. But my bill just went up. What's going on? And then you get on the phone and you start looking to find out what the heck happened. And you found out nothing happened other than the fact that the company just went up on your bill. Okay? We're going to talk a little bit about that today and quite about a few other things. You need this? Okay. And a few other things. First of all, my name is Larry Powell. I'm with a company called Insurance Pros. Insurance Pros is located in South Holland. I am a suburbanite. And I've been in the insurance business for a little while. And I was with American Family. Loved American Family. American Family is the #2 company in terms of customer service. The challenge is that they're a one-size-fits-all. And I needed something a little different with the diverse people that I actually service. And so I did something a little different. I became an independent agent. Again, to independent agent, not broker. A broker is a person who does not have companies that he represents. In other words, he has to go find somebody to insure you with. We can actually insure you right there in the office. When you come in, you walk out. We actually sell all kinds of insurance. I mean, every kind, event, and so on and so forth. I'm going to talk about housing a little bit, but I just want to cover a few areas just to make sure that we're at a point where we're going. The first thing I want to talk a little bit about is about auto insurance. I talk a lot with people about auto insurance, and one of the things I find out is that people don't know what their limits are. Okay? You say, well, what's a limit? I know I got full coverage. Well, what's a limit? Well, on your insurance policy somewhere, if you got full coverage, it says something like 20, 40, 15. Or it'll say 50, 100, 50. Or it'll say 100, 300, 100. All right, so what the heck does that mean? Well, that very first number that you see on there is the actual amount that someone will receive or could potentially get if they sued you. I'll say it again. That's the number that person could potentially get. And so what we do is we determine how much of that you need to have. And that actually depends upon who you are. If you are, let's say, a basic student that don't have a lot to lose, 20, 40, 15, which is the state minimums, would be adequate for you. If you had, let's say you lived in an apartment, you had a job worthwhile, whatever, 24, 50, 150. But let's just say you were a homeowner. I think you minimally need probably $100,000 in general liability coverage. That's the first number. The second number is what? That 100, 300, 100. 300 means that for everybody in that incident, $300,000 is what the insurance company is willing to cover. And the last number is property damage. We're talking about general liability coverage. Wait a minute. What about insurance? What the heck is insurance? Let's understand what insurance is. Insurance is you going out to a company and saying to them, what are you willing to charge me to get involved in a risk with me? And the insurance company looks at you and says, I don't know, who are you? Okay, well, I got a job, I've had insurance, I own a home, I got this, and my credit. Insurance companies didn't used to look at credit, and credit became something very popular in the last 5 years. Your risk rating, whether you're getting homeowners or auto insurance, is based a lot on your credit. Of course, you know it's based on where you live. In addition to that, it also is based on what you're driving. We're talking about cars, okay? So all that kind of goes together. Now you're rating cars. Depending on the kind of car you drive, determines the type of insurance you're going to have. So now we got limits, we got the type of car, we got where I live, we got my credit rating, and all of a sudden we can come up with something. Now wait a minute, I just had an accident. And a lot of times folks don't get this, but whether you had an accident and it was a $100 claim or it was a $1,000 claim, the insurance company looks at it as being a claim. What about there was nothing? It was, they told me, they came to pick me up, they boosted my car off. It's a claim. We're adding up stuff against ourselves on that. And so things kind of get to be more expensive. So, auto insurance is something we actually look at and say, hey, it's all over the board. But I say most of the time when I'm talking with folks, their limits are normally out of whack. Because a lot of times people have a lot of stuff and they don't have the right limits. Okay? Let's move a little bit forward. Now let's talk a little bit about the house. homeowners. It's always helpful to have notes. A lot of times when I'm talking to people about homeowners insurance, they always want to rate their insurance with what they pay for their house. And they say that value, well, it's only worth this much. Keep in mind, the insurance company, when they're insuring your home, they're insuring it for something called replacement costs. In other words, they're never going to physically give you the money back in your hand to say, well, look, we're going to pay you off for this. No, that's not how it works. They can do that with a car, because if the car is worth less than what the repair is, they're just going to pay you off for it, but they're not going to do it for the house. So every company, now keep in mind, right now we're representing over 40 companies for residential property. Each one of them have their own particular formula for replacement costs. So you might be over here, the replacement cost may be one thing, and over here, the replacement cost may be something else. We're not talking about market value. You paid $90,000 for the house, but to put it back is $200,000. So that's what you're buying. You're buying replacement cost insurance. Now there's some other type of insurance that we sell also. It's called ACV, actual cash value. A lot of times when we're talking to investors, investors tend to use actual cash value as opposed to replacement costs, because they don't want to have a lot of money in there because they're trying to make money, right? So they insure their properties for actual cash value. In other words, they paid $300,000 for the property, and the company, a lot of companies, they all have their different rules, but the company will actually say what percentage of replacement costs they'll actually take. And some of them will go down to 40%. But that means that the cost of insurance is less. That means it's not a dollar for dollar replacement. So, what is market value though? Market value is what somebody's willing to pay for your property at this time if they were willing to buy it. And that is not what you insure. All right? And the last thing I want to share with you is that when I do homeowners insurance, we automatically do something called sewer backup. A lot of folk call it flood insurance. Really, there is a flood insurance, and it's all through a company called FEMA. We're familiar with them, and that is something you only can buy if your property is located in a floodplain, but you can get sewer backup. I recommend to everybody that they have it. If your basement is finished, then you need to have sewer backup. Now, sewer backup comes in a lot of different flavors. So depending on the company I'm insuring you with, I have to know what that flavor is. When we actually insure your property for X amount of dollars, well, a part of that basement is automatically covered. In other words, the walls and stuff. But what if you got personal stuff down there? That's the type of stuff that sewer backup covers. In other words, the carpet, the televisions, the tables, the beds. Well, now we need sewer backup coverage for that. How we doing so far? All right, real good. Now, we talked about homeowners insurance. Homeowners insurance and dwelling insurance is different. When I say dwelling insurance, if you own a piece of rental property, you don't want homeowners insurance on it. You want dwelling insurance. All right, you say, well, what's the difference? Well, if I'm living in a house and I got homeowners insurance, if something happens to me while I'm in the house, I want my stuff in my house replaced. Also, I need to have money so I can go live someplace else in the event there was a fire. Okay? So that's homeowners insurance. But if I got dwelling insurance, okay, that means I'm the landlord. And I ain't concerned with what was in the house. I want my rent. So in my dwelling insurance, you get what? Rental replacement. They do allow a little bit for contents, but for the most part, though, I'm more concerned with getting my rents back. All right? What else do you think a landlord would probably be really concerned with? He probably is concerned with lawsuits. So therefore, I want some general liability. I want my general liability coverage on my rental property because I'm responsible and I'm not even there. Tell you a little story I'll share with you. I had a lady, a husband and wife, they owned a 3-flat building. The thing about a 3-flat is that you can't get what they call a residential grade property on it. In other words, if you live in your 3-flat, you are actually a tenant in your property. All right? So we had what? Dwelling insurance on the 3-flat, and with them being a tenant, we had to sell them rental insurance. We didn't live in the building. They had a party at their house. Somebody brought somebody and the other somebody fell going down the stairs. Who was liable? Was it their rental insurance or was it the dwelling insurance? Question, anybody can answer that one?
Both?
You said dwelling?
Well,
Dwelling?
I said, was it both?
It was both. What happened was that since they were the owner of the property, the two different companies, and we actually had them insured with two separate companies, they ended up splitting that liability claim. It was only $15,000, but what happens if you don't have it? And that brings to mind something else. It's called, I am a renter. Do I need renter's insurance and why? I would not be a landlord and would not have my tenants with rental insurance. Okay? Because if I do, then I potentially can become liable for something for them that I shouldn't be liable for. We all, if you're homeowners, you own a house and you have parties, you invite people to your home, and you got this great big liability issue on yourself. Every time you have a barbecue in your backyard, or you have people over to look at the football game in your basement, your GL is just out there doing this here because if anybody gets hurt, burned, or something like that happens, you're liable. If your tenant has someone in their home and they're having a party and they fall because they shoveled the snow out there, your tenant is liable for those people falling, not you. So you shouldn't rent something out to somebody without them having some renter's insurance. You should be a part of the lease. Have renter's insurance. How much does renter's insurance cost? $100. Go ahead.
My question is that, since you're talking about insurance, how come as soon as you file a claim, they drop it? Isn't that what they're supposed to be doing?
That's exactly what it's supposed to be for.
So how come they drop you as soon as you file a claim, you paid all this time?
It normally will happen at renewal because there is no commitment on their part to reinsure you. You know, you go to the bank and you buy a CD. The CD is at 5%. It's 6 months. At the end of the 6 months, you get 5% again. No. You know, we get with insurance companies and we assume that we've been with this, I've been with this company 20 years. You don't know who the president is, you don't know who the mayor, you don't know anything about any of those people, and you are a number. You know? And so when it comes up time for renewal, there's no amiability there on your part, or on their part to keep you.
Yeah, but you've been paying all your money out to these people, and it just goes.
But there is nothing there that says they're gonna keep you, and they don't, you're a number. You see, when I told you that I was an independent agent, let me tell you a little bit more about what that means. That means when your insurance comes up for renewal, as opposed to being a one-size-fit-all company, we automatically put you back in something we call a rater. We go out to see if that is still the best company for you right now. Does that make sense? See, because when I bought my house, this was my situation. All of a sudden, my situation changed. I ain't that same person no more. Maybe my stuff has gotten better, maybe it has gotten worse, but you still can maintain that premium. You just need to change companies. And so as opposed to you doing that for yourself, that's why people use independent agents.
They won't take, when you make a claim, that's what they won't take.
Well, it's not necessarily that we won't take you out, but I do have companies that take people with 2 claims and give you the same rate you get over here, and they're all A+ rated. Because their risk tolerance is different. You got national companies and you got regional companies. Okay? When you go to a national company, you're in good hands. Expect to pay more. You can go with a regional-based company, which their risk tolerance is different. You don't necessarily have to pay as much. You know, there are companies that do not do business along the coastal shores. And then there's companies that do. Okay? So, kind of moving right along. We talked about something else I want to make you aware of. If you are a landlord and your property has been vacant for 30 days or more, your insurance company is not responsible to pay any claims you may have on that property. Okay? Be aware of that. In 30 days, there's a coverage called vacant and board up. If your unit has been vacant for 30 days, you do need vacant and board up insurance. It's normally a 3 or 6 month policy, but it basically covers the dwelling and it does supply you with general liability. And of course, there's also industrial insurance. Okay? So why they drop you so that you have a claim?
Mr. Pop, Mr. Pop, I don't want to reiterate that. Now, you said that if you own property out here and it's vacant,
Right?
after 30 days, your insurance is not liable, you need to buy some extra insurance?
I said if you have dwelling insurance. In other words, you got insurance for having a tenant in there.
Okay.
Your tenant is moved. It may be 30 days, it may be 60 days, but that company's not liable to pay you because your insurance says that there must be an occupant in that property. If there's nobody in there, guess what? They're not liable to make payment.
Okay.
There are some areas I got a concern. One of them is called replacement cost versus actual cash value. I wouldn't recommend that you take your primary resident, because if an agent quotes you actual cash value on your primary resident, it's gonna be a ridiculously low dollar amount. I just say beware. If it's your primary resident, you definitely wanna go with replacement cost. The other thing we look at is deductibles. I get people in and they're swearing by this real low deductible, and there's nothing wrong with that. But if you haven't had an accident in 10 years, you've been paying a premium for $250 a month, you've been paying $200, $300 a renewal period more. You've been paying $300 for 10 years, every 6 months. That's $600 a year you've been paying, times 10 years. You paid $6,000 in premium that you did not have to pay because you had this $250 deductible. There's nothing wrong with that, but when we have $250 deductibles, a very expensive car costs $10,000. A very expensive car now is $50,000, $60,000. The average deductible on cars now on most companies are at least $1,000. Higher end cars, $2,500. The same thing is about your homeowner's insurance. $500 versus $1,000 versus $2,500. Your deductible is always relative to whatever you're insuring. That's a concern issue for me. We talk about just renter's insurance and the landlord insurance. And the other thing, if you have children and they're driving cars, you really, really need to consider having an insurance umbrella. We talked about those limits, that 100, 300, 100. We said 300,000 was basically the coverage for the maximum for an incident. But you got a kid that's driving his friends around. If there's a catastrophic something that happens, you may need more than $300,000 for an incident. What a personal umbrella would do, it would give you $1 million worth of general liability coverage. That would give you $1 million worth of coverage over everything that you own and do personally. If you own rental property, you own 1, 2, 3 pieces of rental property, you need a commercial umbrella on yourself because one will lead to another. Case in point. Insurance companies, you know, we got these pit bulls, we got these Dobermans, we got all these man-eating dogs out here. A man-eating dog was in a house of a rental, and the guy from Comcast went in the house to service him. The dog bit the guy in the calf and ripped his calf off. 7 months later, $600,000. Who was liable? The owner. No, it was a rental property. The owner of the property was liable. $600,000 later because he let his tenant have a what? A pit bull. Pit bull insurance coverage. You know, we ask you, do you have a dog? We ask you, what kind of dog you got? You got a man-eating dog.
They're not gonna cover it. A lot of them not doing it now.
They're not gonna cover it, but if you hide your dog bites somebody, guess what? That you own that. But I just say I was giving you some ideas about this umbrella coverage, and also pit bulls and dogs and things you don't know and things you need to abide by, because people feel if I've been paying my premium, I'm supposed to have coverage. But that's not necessarily the case. But umbrellas are only $1 million umbrella will cost you $100.
Also, umbrella on automobiles as well. You can have the insurance on your automobile, and it might have an accident, total the car out. Insurance only gonna pay so much for the car, and you might still be left with a $5,000 balance if you don't have that umbrella insurance on the car.
Well, now we're talking. We got umbrella coverage, but we're also talking about gap insurance. Okay. That gap insurance would make, if you bought a new car, you put a little money down, you definitely need gap insurance. Gap insurance on your insurance policy will be substantially less than the gap insurance you will get from the dealer, okay? And the other thing I want to talk about real quickly, and I know I just had you guys' ears for a long time, is something called mortgage protection insurance. Mortgage protection insurance actually pays your house off in the event that you pass away. It leaves the person, the surviving spouse, or someone without the responsibility of a mortgage. Mortgage protection insurance is very inexpensive. We don't have it. There are a lot of kinds of insurances you can buy, but this one is specifically for paying the house off. And I just recommend it to folks that that is something they should consider, is mortgage protection insurance. I really enjoyed coming today to talk to you all about property. I'm told I'm gonna be able to come back again and talk to you all about life insurance. If you have a life insurance policy or even investment that was purchased prior to 2008, you have an obsolete, antiquated, either a retirement plan and also insurance policy. There's something called a mortality table, and that says how long we're gonna live. And if you've got a policy that is old like that, you could either A, be having more coverage for the amount you're paying now, and or you have death insurance. Most life insurance policies today, you can use while you are still alive. And that's amazing. That's what new stuff is about. Things progress and change along. And so we do insurance reviews at Insurance Pros. And what we do is we give you a chance, we sit down and take a look at everything you got. And there's one thing about it is that it's free, it doesn't cost you any money. But at least you know that you've got adequate coverage. And in many cases, what we do is we're able to save you money in areas that you're not even aware of. So you can actually start an investment or an emergency fund or some other type of savings that using the money you already got. And that's the most amazing part about life. We always have to be looking for ways to change. And that's always hire a professional to do things for you that you don't necessarily want to do yourself or not that you couldn't do yourself. But you've seen this big thing of money that drops down on television. I don't know which one of these tax companies saying that you left all that money on the table. But guess what? People do it with insurance every day. Hey, look, I really appreciate you all. And I'm going to have a sheet. Go ahead.
Okay, now, what type of insurance can you have? Like, for example, it's snowing out here. Okay, now when it starts getting warm, you talking about flooding, possibly.
Right.
So what type of insurance can you use to cover for like flooding?
Well, you've got to be in a floodplain in order to buy flood insurance. But you can't get sewer backup. If your sump pump goes out, then you can get sewer backup coverage on your existing policy.
Is that cost a lot?
Sewer backup may be $100. It's all relative to where you live, what kind of house you're in, but normally $125 for a year.
Oh, that's how?
Yeah.
A year?
For a year. Like I said, she said knowledge is power. It ain't always that everything costs a lot of money. Most of the time, I'll sit down and do an insurance review with someone who's talking to me about a retirement strategy, and we get to their home and their auto. It's another $250 a month or $100 a month we can take and use for their retirement plan because they're overpaying. And that's not to say what company they're with one way or another, but you really need to do an insurance review on your home and your auto every time it renews. You ain't got time to do that. Whether it's me as an independent agent, you need to be with an independent person.
Mr. Powell, one thing, can you key in on one item, which is clue report? People get that confused with credit report, they don't understand that when it comes to insurance. Can you just explain the difference so people know?
Okay, an insurance report, you know what that, a credit report, you know what that is, right? All right, well, how about this? There's this big old credit bureau out in the air, and it's on you and on your car, and when you do certain things, this thing will come up and it'll actually tell the story. And the same thing is true with your MIB, which is a mortgage insurance bureau report. You get pills and stuff like that, write insurance, underwrite it like that, bingo. Right off the bat, they can write you, because there's a bureau. They got various bureaus they can clue right in on. And so every time we talked about that claim you had that there was no money associated with, well, guess what? That's on your clue report. Okay?
How long does that stay on the report?
It varies. You may be with a company that will only look at it for 3 years. You may be with a company that looks at it for 5 years. And so, the same thing I told you, I've got companies that will take you with 3 claims, 4 claims. We got companies, how about this here? We'll actually insure you without a driver's license with some companies. But some people have to have it. I had this to happen. I had one of my clients, she was driving somebody else's car.